Hey guys, Adam here at DirectionTrader.com. Let's do today's recap of the live trading room and let's talk about what I see moving forward. It's about 10 after 2 here, Central Standard Time, so we've got a little time left in the market, but I think it's a good time to go ahead and just kind of call it a day and start talking about what we've been doing today. Early this morning in the trading room, we were very quiet, believe it or not, on a day like this. This morning we were very quiet. Even though we had a nice push to the upside today, there was something holding us back in these stock index futures, and I'm going to talk about that now. So look down here. You can see a chart here. This is the advanced declining stocks. This is a market internals. It tells me basically if the overall NYSE, this is the NYSE, not the S&P or anything like that. It's the NYSE advanced decline. And this morning in the trading room, we noticed that it was staying bearish all morning long. And as you can see here, this is the Russell. We had a really nice pop to the upside this morning. And believe it or not, we didn't take any longs. We were talking all morning about looking at these internals, and they were staying bearish and negative all morning long. So I didn't know if this thing was going to reverse here, thought it might reverse at the previous day's highs. We didn't know where it would actually reverse. So I wasn't going to guess on these pullbacks which one was going to officially fail. So I just kind of sat on my hands and was patient. Either the market internals were going to turn to the upside and I was going to start trading these pullbacks, or I was simply just going to wait it out, using my patience and discipline to wait it out and wait for my opportunity. Remember, if I'm not able to think clearly, so if I were to go long here against the market internals and against what I believe in with my methods, I'm not going to be able to think as clearly when I'm managing this position. So I stayed out of the market. I was patient all day. We ended up taking one Dow trade later in the morning as the market it came up towards its pivot point, and we have certain price patterns that we look for. Most importantly, reversal patterns we look for in momentum as certain markets reach their maybe support or resistance, whatever it may be. In this situation, it was kind of around the pivot point, but we had to be disciplined all morning because the market was trading up, up, up. We started to get some reversal patterns, so we were able to get the Dow short right below the daily pivot. And the whole reason we weren't able to go long all morning is simply because these market internals, they stayed bearish all day, forced us to be nice and disciplined and patient. And sure enough, you see what happens this afternoon. We had the market pushing up all morning pushing up, but we were not going long because our internals were telling us that this was a bearish move, and we just had to be patient and disciplined and wait for the fade. Sure enough, if you were able to do that, this afternoon was wonderful. It constantly made nice pullbacks, great trading opportunities to the downside if you were willing to be patient all morning and not blow your account out before we got this afternoon fade. So made for a really great trading opportunity. I know everybody in our trading room, we were talking about this all morning, just waiting. It didn't happen in the morning. You had to wait until the afternoon session to get this, but it ended up being a great opportunity for trading, and I hope you're all able to take advantage of it. So that was the reason we weren't completely aggressive this morning, simply because it came during lunch and towards the afternoon session. Let's talk about moving forward, what we see. Now, let's just go ahead and blow up the daily charts here. This is a daily chart of, this is Russell here. Russell's here at its resistance. Now, it's a little bit different than, say, the S&P or the Dow or the NASDAQ, which are trading at all-time highs up here. But the Russell is also at resistance. So we got a few things going on. If I were to pull up, let's just say pull up the S&P, you're going to notice what we've been talking about. We got these highs, higher highs, and higher highs. But you see here, we're getting lower highs on our indication, meaning there's some type of divergence here to the bearish side coming into play. When is that bearish divergence going to kick in, and when are we going to get a pullback? We don't know. We can just play what we see here. So we're just patiently waiting for that day. Sure enough, today we saw bearish recordings early in the day, so I didn't get aggressively long. Ended up paying off the end. Moving forward, what am I looking for? Well, we've had quite the push here for quite some time. So I will continuously watch previous day's lows until we can pull back and test some of these major areas, and each one of these index has it. Just go ahead and mark up your chart and find it. But basically anything below the previous day's lows, I'm going to be looking for kind of aggressive shorts here on the stock index futures. Even though the Russell is also, they're trading sideways on the daily chart, but the Russell is actually up at its resistance. So it's kind of in the same boat. Anything below its previous day's lows, I'm going to look aggressively short. Anything in the middle of its previous day's highs, previous day's lows, got to be really careful, guys. Maybe play off the previous day's low, play off the previous day's high, but anything stuck in the middle, I'm going to be a little bit cautious, okay? I'm going to be a little bit cautious. And then for obvious reasons, anything above the previous day's highs, I'm going to look to go with it. So we're kind of at that point. We're trying to decide if this is the pullback. You see, we thought maybe we had a pullback last week. We had a couple-day pullback. It got short-lived, so we got to be really disciplined, guys. Anything below the previous day's lows, it looks like it's going to work out really well to look for permanent shorts. And then also anything above the previous day's highs, it's been working. It's ready to go. So we kind of got that nice fine line there, which is good for us because we like to have that opportunity to either be bullish above or bearish below. So it makes for a really good opportunity when it comes to day trading. So let's move on here to the crude. Talk about that for just a moment. Crude is down here at these lows, retesting this green line that we have going through here. That's a previous swing short, previous swing low, I guess I mean to say. Last week, we talked in all the videos last week in this area, we were talking about two things, either a reversion to the mean back up towards this 21 EMA or a retest. Crude is notorious for retesting of some kind. Just look back here, guys. Up here, crude retests before changing. Retest before popping back up. Retest before popping back up. Head and shoulders, kind of a retest before rolling back over. Little bitty double top up here if you were to look at that. So crude is notorious for retesting. So we thought one of two things. Either we're going to pop back up and revert to the mean before retesting, right? Or we were going to retest before getting some type of reversion to the mean. Now, does this mean that this thing is going to reverse tomorrow that we've retested? No, we know better than that, guys. We're not just going to assume. But what we are going to do is we're going to pay close attention to that previous day's lows. We're in a downtrend. Anything below previous day's lows, I'm only looking short. Look back at this downtrend. If you would have kept trading short below the previous day's lows, boy, that makes for a great trading opportunity all the way down, each one of these. But if we're above the previous day's lows, I'm going to look for our 5 and 15-minute anchor charts to have higher highs and higher lows and get this momentum to revert back to the mean. Now, the reason we say use the previous day's lows is because sometimes these things push down and they pull back, which means they revert back to that EMA, right? Sometimes this is what they do. Sometimes they drop and they just do this. That's their reversion back because they let the moving average come to it rather than reverting back to the moving average. Which is going to happen here? We don't know. So this thing may want to drop a couple more days before starting to pause, which in that case, we're going to break below the previous day's lows. That's where we're getting that trading opportunity to the short side. Anything above the previous day's lows, we may either pop up or we may go into a consolidation. Either way, it provides for a great intraday trading opportunity off these lows. Something very, very, very close to watch. Makes for some really, really, really good trading opportunities, especially when the markets get overextended like this, away from such as a 21 moving average, a 30 period, whatever you like to use. So. All right, guys. I hope you enjoyed this video. I hope you was able to learn something with the way that we use them internals to be patient enough to wait for that afternoon fade today and take advantage of it once it starts to happen. And then the same thing here on the crude. Either a reversion to the mean of some point or keeping in mind that crude is notorious for retesting them lows and to be patient enough to wait for such of a retest. So if you guys have any questions about any of this stuff, you're always free to get a hold of me, adam@directiontrader.com. I get a lot of emails, and I appreciate all the nice stuff that you guys send me. So I do my best to get back to you with my response as soon as possible. So if you'd like to get a hold of me, go ahead and email me, adam@directiontrader.com. If not, I appreciate you watching, and I will see you in tomorrow's video. Have a good afternoon.